Good morning, it's the 18th of July. We are Signal Centre Talking Ball. Welcome to the start of a new trading week. I'm Joe Neighbour, joined by Jamie Pakenham-Walsh. Good morning, Jamie.
Morning, Joe. How have you been? It's been a few days since I've been here. It seems to have got incredibly hot since I left.
Yes.
Looks like it's going to be a really hot one today.
Yeah, it's going to be a scorcher by the looks of things for the next 2 days in the UK, which we're not built for over here, are we? So
We really aren't.
no, we'll see
No,
how we
it's going
get
to be a
on.
struggle. Yeah.
Yeah, absolutely. But it's cool enough at the minute, so let's crack on and go through the latest headlines of what's moving markets over the weekend and into the start of a new trading week. So let's bring up the headlines here to start with. So measured increase in US retail sales. The headline US retail sales increased 1% for June, and that was above the consensus forecast of 0.8. In terms of the University of Michigan inflation expectation, we saw a decline there. The confidence index edged higher to 51.1 for July. From the 40-year low of 50 previously, which was slightly above expectations, and there was slightly stronger bounce in current conditions, but the expectation index edged lower with its weakest reading since 1980. We've seen US yields retreat given the notable Fed focus on inflation expectations in making policy decisions. Fears over a 100 basis point hike this month faded as a result of that Michigan confidence data. In terms of risk appetite, that appears to have recovered a touch, and we'll come on to it in a moment on the charts. The US yields also sapped potential dollar support, and Euro US dollar managed to secure further limited net recovery back above parity by over 100 ticks. Although the sentiment does remain notably fragile. The Fed is in a silent period. The Fed blackout period is now in effect, and markets will continue to monitor media reports closely, given that there was a Wall Street Journal report just ahead of the previous meeting, which warned that the Fed was considering a 75 basis point rate hike. We've got a key ECB meeting this week. That will take place on Thursday, and there'll be a significant element of caution ahead of that meeting, with particular focus on periphery yields. So, off to a decent start by the looks of things this morning on a number of asset classes. Obviously, the dollar index has really been the main talking point for some time, and the number one performing asset, but we have seen a little bit of a call off in that. So we've got the daily chart up here. We highlighted a big resistance level at 108.74 as highlighted by this red line. We had a look above it on the 14th of July, but on Friday we actually posted what looks to be a bearish engulfing candle on the daily chart, and that's been backed up today with further losses down by 0.25% as things stand. So potential for a bit of a reversal on this in the very short term. Obviously, overall, the underlying trend remains very bullish. So not going to be looking for any sort of huge shift in the overall outlook of the market for now. But this is a bit of a warning sign, I think, for the bulls who have been driving this higher for some time. So maybe we could see a bit of a retreat in the dollar index. The level that we've got to look for on the downside is 105.78, which is highlighted by this blue level here. That's that previous swing high from the 15th of June, which may do a job as support on any pullback. So that's having an impact, obviously, elsewhere. If we take a look at Euro US dollar, as we know, that's been really suffering of late, but seems to have found some support at parity. That level has been defended. That one level wasn't really a particularly strong technical level to look at, but obviously had some psychological impact and seems to have been well defended by the bulls out there. So we saw the body of the candle that was posted on the 14th being engulfed by the price action that we saw on Friday, and we're pushing higher again, up by almost 0.3% on Euro US dollar as things stand. So again, potential for a bit of a reversal here. Probably only temporary, and possibly looking for a move up to this resistance level here, which comes in at around 103.48. So, good sort of 350 ticks above parity. We could be looking for there as a correction in the short term. If we take a look at cable, we can see that's not really reacting in the same sort of way as the move that we're seeing in the euro. Price is still sort of pretty flat to slightly higher. We are up 0.35% as things stand at the minute, but we're not getting that kind of nice uptick that we've seen on Euro USD. So overall, trend still remains bearish, but there is potential there for a bit of a move to the upside. We've seen some of the Aussie currencies look quite robust as well. Aussie yen, as we highlighted last week, had a decent breakout of this wedge pattern, so potential for a continuation higher on that. And there was a couple of other bits that looked quite interesting. So dollar CAD, that looked to be roaring off into the distance with this breakout here that we posted on the 14th of July, but it's come back down, and we've actually seen a gap lower overnight. So on the Sunday night open, we've seen prices gap to the downside. We're down by almost 0.3%, so potential for a bit of a pullback on that. And if we take a look at dollar yen, that still remains quite elevated, given that overall, the yen still looks very weak. It's come up just shy of that 140 level that we highlighted on the chart. Again, no real technical reference, just looking at it as a sort of psychological round number. So we'll wait and see if there's any further pullbacks in that. Moving on to the cryptocurrency side of things. Now, there is some decent potential in this. We've been speaking about it for a while, this sort of triangle pattern that was starting to form, potentially a bit of a bottom. Arguably, we're in the process now of completing a triple bottom on the daily chart. So we found support at the 78.6% fib level, which is the blue line, and we started to put in a sequence of higher lows. Now, what we're doing at the minute is potentially breaking above this neckline that we've highlighted at 21,839. In order to confirm that, ideally, we need to see a close above this, so on a closing basis. So we haven't seen that yet, but it very much is on the front foot today and looking pretty strong, up by over 7% as things stand. So if we can cling on to these gains, we'd be looking for an initial target of 26,137 and an extension of that, a move up to 28,740. So a bit of relief there potentially on the cards for cryptocurrency traders and investors. So yeah, looking pretty robust and pretty strong today. If we look at Ethereum, that actually did the breakout on Friday. Saturday. Decent move to the upside, a little bit of a pullback on Sunday, but roaring off again to the upside again today, up 9% as things stand, and closing in pretty quickly on that measured move target of this bottom pattern, triple bottom pattern, that's coming in at 1682. And in extension of that, we'd be looking for a move up to 1930. So pretty good news for the cryptocurrency crowd, looking as though we're in the midst of a decent correction higher. Overall, don't forget the large top patterns remain in place here, so it may only be temporary, but it's very welcome, I'm sure, given how beaten up this has been over the last few months or so. Moving on to the commodity side of things. So oil looked as though it was in the gutter really last week. Looks as though it was completing some top patterns. It was breaking down through key support. This is Brent oil breaking down below 97.07, but we posted a pretty impressive reversal candle on the 14th of July. So clearly some support coming in from the bulls to push that higher. And since forming that hammer style candle, we've seen a continuation higher, being backed up again by 2.8% gains as things stand at the minute. We'll have to wait and see how it reacts into this proposed neckline of this head and shoulders top, and whether or not we can overcome that and continue this trend higher. If we look at WTI, we've got a little bit more impressive sort of structure on this one. We've got this big double top that we highlighted, which looked as though it was completing last week, but again, the bulls come to the defense of this, posting a pretty impressive hammer candle, and prices are moving higher. So this big level here, around 93, has been defended on oil, and we could be about to see a continuation higher. So until we get a sort of definitive break of this level, then I think we're going to side with the bulls for the time being. So that looks pretty strong indeed. Looking at gold, you'd expect a little bit of a reversal given the weakness that we've seen in the dollar index, but it's only very mild. We posted a doji candle on Friday. We are posting higher prices today, only 0.46% as things stand. We went below this big support level at 1722. but it's below it at the minute. So maybe we'll see some sort of reaction into that level and prices will continue to move lower. We've got some big support levels below to consider. 1676 and 1657 look to be the major areas to consider. If we take a look at silver, it's a similar situation, not really giving us enough in terms of a sort of massive reversal at the moment, but clinging around this sort of key support zone that we've highlighted, or on the underside of it, really retesting that. So not really too encouraging at the moment on the precious metal side of things. Copper looked quite interesting because it's fallen to pretty much precisely a 61.8% fib level at 313.71. And we can see it was a pretty decent reaction posted there on Friday. If we just scroll out to have a look at why this level is relevant, if we go back to the lows that were posted at the height of the pandemic, and we look for the highs that were posted in March this year, the 61.8% level has done a pretty fantastic job. So anybody that isn't aware of Fibonacci levels or doesn't use them in their analysis, we can see a pretty good example here of that doing a pretty good job. So keep an eye out for that, and whether or not we see any sort of correction higher here. Although it may only be temporary, we could see a decent move to the upside in the short term as a result of this finding support at this key level at 313.71. Moving on to the indices, as you would expect, given that there's been a bit of a move in some of the riskier assets, that the indices are going to be on the front foot as well, and it appears to be the case. The DAX fell into a very important level at 12,430 last week, and it seems to be doing a pretty good job. We engulfed all of the losses that we made on the 14th of July on Friday, and we're on the front foot again. One of the key indicators that I like to use, I don't use a lot of them, but the 10 period exponential moving average is a favored one just because I think it can trigger a bit of a shift in momentum. And as you can see here, prices sort of started to stabilize. We posted this engulfing candle, which again, in isolation is a pretty important candle, but we're pushing to the upside as well. And we also saw a close above that 10 period exponential moving average. So maybe we are in line for some further gains here in the very short term. I think if we can take out this high at 13,022, then we may see further upside in the short term. Maybe what we've got here is a pretty decent range or some ranging price action, which could provide some opportunity for traders in the short term. So that looks pretty good today. If we take a look at the US markets, we gapped higher on the futures market so far on the NASDAQ. Need to see it for me above 12,225. And then we're confirming a bit of a bottom pattern here and can start looking for higher prices. So not much more for that to do. If markets remain on the front foot today, then we could easily see that taken out and prices starting to move to the upside. If we take a look at the S&P 500, it's a similar situation. It is still stuck within this triangle pattern, so we need to see it do a little bit more. And also, we've got the neckline of this head and shoulders coming in at roughly the same level. So if we can see a breakout here above 3946, then we'd be looking maybe for a bit of a correction to the upside. But overall, the bias still will remain bearish over the more longer term picture. But potentially some reasons to be a little bit excited, maybe for a short term correction in some of these equity markets. Let's take a look at the Dow to finish up. That is pretty much at the resistance level now that has been doing a job. That's at 31,447. If we can get a break above this and also take out this bearish channel at the same time, then again, that could spark a bit of a corrective move to the upside. We do have some resistance immediately above at 31,912. So, it's got a few levels to try and break down, but when these bulls get going, as we've seen previously, they can be, pretty aggressive and get markets moving quite quickly to the upside. So we could be about to see a little bit of a revival in some of these markets that have been beaten up over the last few months or so. That's pretty much it from me. Jamie, what are you seeing on the stocks? Obviously, you've been away for a couple of days, so I don't know if you've got too much of a view on things, but maybe you're starting to see something similar to what we're seeing on these equity indices.
Yeah, there's starting to be some pretty nice moves at the moment. As you were saying, we're starting to get some breakouts. Things are starting to look a bit better. I'm a little bit cautious saying that because that's when the market gets you, when you think things are turning around. But we'll start off with our biggest loser of the day. which obviously was Friday's trading. We're looking at CDXS or Codexis, which was down 44% on Friday. It's been in a pretty, well, it's not been a horrible downtrend, but it looks pretty rubbish. $42 it was trading at its highs back in November. We're now down to $6. So actually, yeah, when you say it like that, it is pretty bad. Let's see if we can get the news for this. It's trying to show me Apple. I'm not after Apple. Let's see if we can do this. Here we go. Refresh it. There we are. CDXS down over 24% in value after experts say revenue estimates are at $38 million in Q2. And sorry, I'm going to start this again. CDXS was shedding over 24% in value after saying it now expects revenue of about $38 million in Q2 and $135 million for 2022 compared to previous guidance of 152 to 158. So just a bit of negative guidance there, which has led to this pretty dramatic drop off. Yeah, not looking so hot there. Our biggest gainer of Friday was USEA, United Maritime Corporation, which looks like it only IPO'd on the 6th, if this is right. But this was up 175% on Friday, which was obviously a pretty nice move. This is, I mean, if you manage to get in on the IPO of this, and IPOs are always a bit scary, it moved 1,000% in 3 days. So that would have been a nice one to be on the right side of. But looking at this, let's have a quick look, see if we can see why. Shares need double recovering from slump in previous session. Yeah, nothing too much there to look into. But as you're saying, Joe, we did have, certainly towards the end of the week, it was a really strong week. I think looking at those indexes, we saw that it was really the last 3 days, so the days I was away, the Wednesday, Thursday, Friday, where the stocks really started driving upwards. And you can see that if we look at a daily chart. So this is a stock heat map for Friday's session, and it's just green across the board, which looks really healthy. On a weekly basis, though, you can see it's a bit more mixed because we did have a slightly worse start to the week. With Apple was up, Google was down. You see it was a pretty mixed bag. Tesla was only down 1%, Amazon was only down 1%. But crucially for me, and as we'll get onto now, you can see a lot of these weekly charts started recovering. Starting with Apple here, you can see we did run into some selling at the 38.2% fib. This was on, what was that? That had been Tuesday. We got that shooting star, but the buyers bought this back up at this previous resistance here. That might have been quite a nice trade if anyone likes this. So we had this swing high, swing low, swing high, and then the next swing low tested that previous swing high. So that's quite a nice little trade there. But we have now run into resistance of these previous highs in June and the previous lows in March. So we'll see if Apple can get through that today. Let's have a look at this on a weekly basis. So you've got a nice close above the previous week, but we are at that resistance level. So let's see how price reacts with that today. AMC I wanted to have a look at. This was another one where technicals played quite nicely. I'd left this red resistance line drawn in as a potential next target for sellers to jump into the market, and they did come in on the 12th of July, so that would have been Tuesday again. Previous resistance was found here in May, and then on that spike up we had at the back end of May and the start of June. And the sellers were there again, but price seems to be coiling now. It's getting quite tight price action to end the week on AMC, so we will see if it can get above that. That's the crucial level for me that I want to see broken above. Coinbase had this real inside week last week. You can see the range of the bar compared to the previous week was much less, which suggests perhaps there's some volatility coming in soon. What are we seeing here? We're still trading in between these two key levels which we've identified, the $46 and the $63 level. We can probably move that up a little bit now. What are we seeing? I mean, you could see this potentially as an inverse head and shoulders starting to form. So let's see if I can find the tool, which I don't particularly like. But you see, we've got a bit of a left shoulder ahead, and possibly now if we see a move back to this red line, we are getting a bit of a bottoming pattern here. And that will drive us right back into this $82 level, which would be pretty nice for Coinbase. Obviously, we saw that the cryptos have opened pretty strong today, so perhaps that is the kind of move we'll be looking for this week, but we'll see how that develops. What else do I want to have a look at? Fiverr, apparently. So Fiverr, we have this continuation symmetrical triangle pattern. We're looking at a weekly chart here. Obviously, it's had a pretty rough time, so the bias for me is selling until you do see that turnaround. And I mean, we're yet to see it at the moment. I think this is an idea we put out last week, selling Fiverr on a break of this symmetrical triangle. And so far, it has been struggling. And for me, when the overall market is performing well, the stocks that underperform are clearly the weaker ones in the market. So it's worth noting which they are. And Fiverr couldn't rally at all on Friday when the general market rallied quite nicely. So one to keep an eye on there. Checking out GME, this has played out really nicely from a technical perspective for a little while now. I think we probably haven't checked it yet today, but I remember we put a buy idea out when price was down at about this 117 level at this previous support. And I know I take profit was somewhere around the resistance, which looked like it got hit on Thursday. So I'll have to go and check that out. But a really nice range forming here. We did have pretty aggressive selling, it looks like, on Thursday with this shooting star type candle. Not looking so hot at the moment, but the buys did come back in straight away the next day. So that's a positive sign for me. We still got the split coming up for this on the 22nd. Is that this week? Yes, that's Friday. The stock split's coming up. So we'll see how that affects price. But as of now, we've got a really well-defined range between about 150 and about 117. So that's a nice looking technical pattern playing out there. We'll finish on Netflix, which is up 8.2% on Friday. Needing some respite here because this has been struggling for a while. But what we're seeing again two real ranges here. So I'll quickly draw out the second one, which I'm seeing. So we've got this bearish channel which we see here between the kind of 205 and the 165 levels, like roughly. You can see that by the green and the red. But within that, we've actually formed an even tighter range between 171 and about 191. So obviously a really strong close on Friday. The volume's starting to pick up too. It looks like we've got earnings out on this week, Joe. So maybe we could check the corporate calendar in a bit and see what we've got coming up. Yeah, that would be good because that could really determine direction for Netflix. It looks like it's tomorrow after close according to TradingView, but we'll have a little look. And yeah, I mean, that to me it'll give us a punch either way. It will either push us up towards the next resistance at 210 or it will shoot us back down to the previous lows. So I think that'll be a nice little transition across to the corporate calendar actually. So maybe we'll quickly check that out now, Joe.
Yeah, let's do it. Okay, so our corporate calendar, which is provided by our parent company Acuity, is available at various brokers. So if you want to find out who, please feel free to message us and we can give you an indication of where you'll be able to access this. But it's got lots of filtering options. So what I'm actually going to do is focus on the top 100 in the NASDAQ and the Dow 30, just so we can whittle this list down a little bit and see what's coming out this week. So we also want to focus on earnings as well. So in blue, we have all the earnings that are out this week in those companies that we just talked about, NASDAQ 100 and Dow 30. So starting today, we've got Goldman Sachs Group and IBM. So some big players there coming out. If we look tomorrow, we can see we've got Hasbro, Johnson & Johnson, JB Hunt, and Netflix, as Jamie said. So this will be quite an interesting one to look at. So what we have here is the earnings history of Netflix, and it's pretty patchy, as you can see. It's sort of gyrating quite a lot between losses or misses, shall we say, and beats when it comes to earnings expectations. The red indicates misses, the green indicates beats, and the difference between the white and the green, or the white and the red, is what the analyst forecast is versus the actual. So as you can see, there tends to be quite a bit of a difference between what the analyst forecasts are and the actual results. So will be interesting to see really what happens on Tuesday. So this is the expectation here. The forecast is for $2.97 on the EPS. The previous was at 3.53. And in terms of the volatility that's typically created after these earnings, so over the last few occurrences that we've had earnings, price has actually been down quite significantly as a result. but obviously price has already been beaten up pretty spectacularly. So we have to wait and see whether or not that holds true, and we see more negative volatility on Netflix when the results are out tomorrow after market close, AMC. For the rest of the week, let's just take a quick look at what else we've got. We've got Biogen, CSX, United Airlines Holdings. On Thursday, we've got American Airlines, Dow, Travelers Companies, and Intuitive Surgical. And on Friday, American Express and Verizon. So a pretty packed week. This is only just, as I said, the NASDAQ 100 and the Dow 30 constituents that are reporting. So we'll keep an eye on these and we'll be tracking it to see how they play out over the next week. Okay, gun to the head trades. Jamie, I've got to say I've had a pretty much of a stinker in the last week or so. I just can't seem to catch anything. It's just nothing working out for me at all. For those that haven't seen before, every day we pick live trade ideas on the video. We don't give them too much thought. We just sort of pick some levels that we quite fancy on the technicals and see if they can play out between now and 9 p.m. UK time. Each of the ideas must have a stop and a target, so we're not just sort of going in blindly or throwing mud at the wall. We have some structures to these opportunities, and each of the ideas that we come up with must have a risk reward ratio in excess of 2 to 1. We monitor all these ideas. They're all available on our spreadsheet. We post an update on our blog, which you can see on our website, and also you can track all the ideas via our TradingView profile. So if anybody wants to do that, please feel free to check them out. So we've got to come up with 2 new ideas today. I've already picked one while you were going through your analysis, so I'll go through it now if that's cool with you, Jamie.
Yeah, go for it.
Cool. So this is the US dollar versus the Swiss franc. So let's just take a quick look at the daily chart here. Price has been pretty volatile, as you can see. Quite a lot of gyration in price. Quite a large range has formed, actually, really, if we go down by these lows. So we're seeing price move in this kind of pattern for now. What I'm most interested in, though, is on Friday we posted an engulfing candle. So we engulfed all of the gains, or the body of the gains that we made on the 14th of July. So for me, that could indicate that we are about to see lower prices. And given what we've seen on the dollar index and the potential for that to correct, posting that bearish engulfing candle as well, we may see lower prices here. So when I zoomed into the hourly chart just a moment ago, I could work out here that there was a channel, a bullish channel that's been broken to the downside, and potentially the formation of a double top here. So one top here on the left, second on the right, and a neckline down here in black, which is at 97.55. Now, in order to give us an indication of where these or where price could head based on this being a double top, what we do is take a measurement from the high to the neckline and project it lower, which comes in at 96.24. If we take a look at price action over the last hour, we can see it's forming a bit of an engulfing candle there, following a bit of a correction high into that neckline. So it all seems to be adding up quite nicely from a technical perspective for me today. Obviously, these trades are highly speculative because we're looking at hourly charts. So I'm going to sell it at the current price of 97.53. I'm going to target a move down to this measured move target at 96.24. And I'm actually going to keep my stop loss quite tight, although this hasn't officially formed an engulfing candle yet, because we've still got 32 minutes left in the hour before it does. I'm actually going to keep the stop quite tight anyway and have it above that candle, which comes in at 97.74. So pretty impressive risk reward on offer here from my perspective. 6.17 is what I'm looking for here on US dollar versus Swiss franc.
Yeah, that's nice. You've got a lot going in your favour there. Maybe this will be turnaround Monday. It doesn't quite fit.
Well, if this hits target, then I will just forget about all those last week's worth of gains, because it'll just wipe them all out and some. So that's what you got to look for.
Nice.
Over to you, buddy.
Thank you. So I'm actually looking at silver today. Silver, as I think we've referenced a few times, had a bit of a horrible run as of late, and honestly I'm looking for that to continue. I'll drill it down to an hourly chart. Let me just get this on the right screen. Here we go. So looking at from an hourly chart, what I'm seeing that I quite like is that we had this previous support level at about 1891, 1892. We broke through that pretty conclusively last week. We're at retesting it now, We've got a 61.8% Fibonacci retracement from the recent high to the recent low. We've started to see some selling. There's certainly some stalling of price, so I'm just going to hope for that move to now reverse and the bearish trend that we've seen to continue. So we are going to be selling silver at current price, which is 18.90. There's a lot of extra numbers, but I take the first two for silver. 18.90. Oh, is it 905? This is different to my chart. 905, we'll call it. We're going to take profits towards the swing low, just in front of it by a pip or so, at 18.15. And our stop loss, we give it a little bit of room because we can still get some pretty good risk reward, keeping the stop at 19.11. So if this one plays out, we will hit a 3.68 risk reward, which would obviously be very nice. We both hit today, Joe. Looks like we're making 10R, so fingers crossed that we see a move lower on both of our assets.
That would be most welcome to start off the week. I think, given how hot it's going to be, we can probably take the rest of the week off if that happens. So
I completely agree. Completely agree.
Fingers crossed for us. Okay, so those ideas are going to be published very shortly to our TradingView account, so please check them out if you're interested. In terms of what to expect from the rest of the trading day, we've got a couple of, well, in fact, we haven't got any data out today of any note, to be honest. We've got overnight Australian monetary policy minutes, so that's not going to come out till 2:30 a.m. UK time overnight. For the rest of the week, we've got UK CPI inflation data to keep an eye out for. Obviously, inflation is the hot topic at the minute and driving pretty much all of the central bank price policies at the minute. On the 21st, we've got the ECB policy meeting, which will be all important. Will they start hiking rates or give us some indication of what their plan is? And then also on the 22nd, we've got European and US PMI data to keep an eye out for too. So certainly starting off on the front foot today as things stand. Let's see if that can continue and we can see a bit of a reversal in some of these markets, given that they've had a bit of a tough time over the last couple of months or so. Anything further to add, Jay?
Not really. I think anyone that's watching in England, do stay safe today. It's meant to get up to 38 degrees where I am in London, so it is going to be a real hot one. So drink loads of water. That's my final message. Stay hydrated.
Yeah, that's a good message to finish off on. Yeah, be careful out there, guys. It's going to be a warm one, and tomorrow as well. So hopefully we haven't melted into our seats by tomorrow morning.
Yeah, fingers crossed.
Cool. All right. Well, have a great day, everyone. We'll be back tomorrow morning.
Thanks, everyone.
See ya.